Hey everybody, this is the August 2021 monthly market update. My name is Lane Kaoka. I run simplepassivecashflow.com, owner of 6,000 units plus, and we are going to go and look at what's been happening in the news lately that's going to be impacting investors. If you guys haven't had a chance, type a comment below, say hello, and if you got any questions, I'll be trying to manage the comments and answer any questions you guys have, or if you guys have any fun comments. But if you haven't yet, grab my remote investor e-course. So this whole journey I've been on started in 2009 when I bought my first rental. Then in 2012, I started to go invest remotely in Birmingham, Atlanta, and Indianapolis. Uh, Created this e-course because everybody was asking how to do it, and it's all the same questions over and over again. So I created this course, and I want to give it away for free. So you can pick it up by shooting me an email at lane@simplepassivecashflow.com and put light in the subject line, and we'll get you access to that. But all right, here we go. What's up, Jin Hee? Hello, anonymous Facebook user. How will inflation impact you? Well, it won't if you're unaware of it. If not, it'll just rub money in your sleep, right? Because if you own $1 million now, that $1 million is probably going to be losing 5 to 10% of its value every year. It's ultimately your buying power. It doesn't matter how much money you have. It matters how much the value that it buys. If you guys like this, you can check out the podcast Simple Passive Cash Flow. Um, it's all about real estate investing for passive real estate investors. And then there's house flipping, wholesaling, burr stuff. There's more passive investing for folks with good jobs. And this is also on the YouTube channel for those of you guys who are listening in the podcast. But here we go. So we want to start off with a few teaching points that people have been asking the last month, and then we'll get into the monthly market update. Now, some people have been saying, well, hey, I found, some people's pitching me this deal for like 12 to 20% interest rate. And, I'm lending money on a house flip. And, first question I asked is like, all right, well, how much experience do these guys have? Because likely what you're doing is like you're buying crappy paper. If you guys are familiar with like Moody's, S&P, and um, credit ratings, they'll rate lenders, right? And in the same way, you could sort of rate the people you invest with, or a house flipper. And a lot of times, what's happening is you got super newbies who still work their day jobs and are doing this as a side gig, who you could probably see as F or D paper, and giving people really high rates. But unsophisticated investor will just go rate chasing, but a smart investor will want a good rate, but more importantly, to be investing in a person who is experienced and good. So maybe that's a class paper in this respect, or B paper, and but that might be more of like a 5-6% interest rate that might command. I got a lot of guys that I know in mastermind I used to be a part of, that they can get 5% notes all day long from investors because they have a good long track record and really reliable. It's the people who are brand new that have to pay 15-20% plus. And be on the aware, like there's a lot of people that will like kind of like white label and remarket a certain loan to sell it to unsophisticated investor and create some kind of markup. So for example, what they'll do is they'll get some brand new house flipper who can't get a loan because they don't have any track record and nobody trusts them. And then they'll lend the money to them, and they'll flip it around and lend money to you. And they'll kind of market it as like a B class type of, or B kind of paper grade. And maybe you'll invest and get 12%, but then they're charging the other guy 20% on the back end because it's a really bad investment, and they're making that big spread. I think this is, as an investor, you need to know who you're investing with to make sure that this little middleman thing ain't going on. Because at the end of the day, you're investing with a complete newbie, and I mean that's fine if that's your investment strategy, and you're going after the high risk type of stuff, but at least know what you're investing with. And yeah, there's a lot of these types of private money or capital groups kind of doing this type of stuff, and this is all done in the house flipping world, which I don't really a big fan of anyway. So be on the lookout for that. And then also, big thing that we do with a lot of clients are taxes, right? I mean, you can invest, and that's great. Maybe make 10, 20, 30% returns in real estate, which is backed by a hard asset. But for a lot of the high net worth clients, it's really about, protecting your income. Make two, three, $500 million a year from your taxes. If you guys want to check out my personal taxes, go to simplepassivecashflow.com/tax. But it's like the athletes, they get really hammered here. LeBron James, Tiger Woods, Anthony Davis, Floyd Mayweather. I mean, I don't think they have good tax representation, but it's the wealthy guys who make a lot of income but don't pay too much tax. Yeah. So be on the smart. You may make under 100 grand, or you may make under $300,000, but hopefully you pay less than 10 or 20% in taxes. All right, so crypto investing here. So if you guys don't, I watch a lot of Reddit blogs and stuff like that, and this guy is like this little lizard-looking creature is called Anon, I think, and it's supposed to be a representation of some random anonymous person, average Joe. But this is very typical out there too. Another thing to be on the lookout for is somebody who invests crypto once and then loses a month of wages, and then now they consider themselves a day trader and an expert in crypto. So I mean, I don't claim to know anything about crypto. I do think it's a good thing, but I don't know. I just kind of stick to my own lane, which is investing in real tangible assets. And you guys can learn more about simplepassivecashflow.com/start. Let's get into the monthly report. So this was a cool graphic that I found. It kind of outlined the tax strategy or taxes that citizens paid on average in different countries. And the United States is sitting at 24.5%. By the way, if you guys pay more than that, you need to get on the passive investing train and get away from ordinary income and find a way to do rep status, is all I got to say about that. But these other countries pay anywhere from like 30 to 40%. So I guess the takeaway is the United States, we don't pay too much taxes compared to other countries. Now, somebody in one of my groups said, well, those other countries, they have a lot of entitlement programs. The United States is kind of the only one in this group that doesn't have government subsidized healthcare or free healthcare like how you have in Canada. But maybe that's probably coming at some point. I'm not going to say it's right or wrong. I don't care. It is what it is. But, I think that my takeaway is taxes probably going to go up, right? The rest of the world does it. America could probably bump it up a little bit more and get away with it. So it is even more so to pay attention to your taxes. If you guys need to learn more about that, go to simplepassivecashflow.com/tax. All right, so what's happening in rents? So Apartment List came up with this graphic saying that, so we look at the dotted line was the national median rent pre-pandemic trend, which is just a boring cyclical trend that's kind of just going upward. But with the whole pandemic, everybody kind of got frozen, and some rents pretty much just stayed stagnant. But now what you're starting to see this first 2 quarters of this 2021 is rents are skyrocketing. I mean, places in Texas are going up, high single digits. In a place like Phoenix, it used to be 6%, which is still pretty high for a year, but now it's like getting over double digits there. Different news sources report it differently, but rents are going up, folks. I mean, if you haven't caught on to this, I mean, you're 2 quarters behind the trend already, and part of it is pent up demand, right? But I mean, I think it's good to be a landlord. to be a landlord. John Burns Consulting came up with this cool infographic touting the rise of sister cities. So, what sister cities are is like Tacoma is to Seattle, Canton, Ohio is to Cleveland, Stockton is to the East Bay, like Oakland, Bakersville is to Los Angeles, Tucson is to Phoenix, Colorado Springs is to Denver, Fort Worth is to Dallas, Port St. Lucie is to Palm Beach, Greensboro is to Durham, and Philadelphia is to New York. And these are just to name a few, but I guess the takeaway from here is, this is another trend that's going on: the rise of the great MSAs, where you have mega cities. So I'm not to the quite the point where Portland and Seattle are combining all in one huge city, but like in Seattle, Seattle and Tacoma, sure it's separated by 20, 30 miles, depending how you get the ruler out, but it's becoming one giant MSA, and people are kind of clumping together in these metropolitan areas. And I guess what you're seeing from an investor perspective is, like typically you can't cash flow in the primary markets, and you typically can't cash flow in the main headliner city. But where you find cash flow is at sister city. And I'm not saying any of these sister cities are good, but it's just a trend to be on the lookout for, especially if you live near one of these cities and you're just unwilling to go outside your local area, where you don't have enough money in. So there's really no sense to diversify yet. But most accredited investors, they kind of you know wake up to the fact that you want to be a remote investor investing in the top 5 markets across the country, as opposed to just kind of staying in your regional area or where you can drive to. I don't. RealPage reports that the DFW, Dallas Fort Worth, leads strong metro demand performance, now including gateway markets too. So what that means is Dallas Fort Worth means quarter to apartment demand, which is net increase in occupied units. So I'm just going to read this from top to the bottom, from the most to the the bottom of the top 10 list or so. Dallas, Fort Worth, Los Angeles, Orange County, Houston, Chicago, South Florida, Washington D.C., Bay Area, New York, Seattle, Atlanta, Phoenix, and Austin, Texas. So what this is a report of is strong metro level demand performance, now including gateway markets too. So one important thing to kind of note here, these are sort of larger markets. I guess Austin is kind of small, but I don't know if they're including the tertiary markets, which are those smaller markets, anywhere from 250,000 to 1 million population. And Los Angeles is number 2 on here, but I wouldn't invest there. You just no cash flow. So depends on what your investment strategy is. Joint Center for Housing Studies of Harvard University. If you guys like graphs and data, man, you need to follow what's Harvard doing these days. They come up with great articles that are really thought provoking, in my opinion. They got a lot of like racial stuff, not in a bad way, but it's just kind of interesting to kind of review what the stuff that they come up with. And so in this article or this graphic, what they're showing is the leading indicator of remodeling activity, second quarter of 2021. So what you're seeing here is remodeling activity coming up from the beginning of the pandemic, almost doubling where we are today, where we were. And this rate of change has been kind of steady over time, which makes a lot of sense. A lot of people are remodeling. Stuck in home, make the place that you are a little bit nicer. Makes sense. Adam, these guys follow a lot of lender data, and what they're reporting here is U.S. properties with foreclosure filings in the first 6 months of 2021 hit an all-time low of 65,000. So I guess this makes sense because the rent moratoriums, which just got extended, by the way, I think it's going up to September, October. just continuing to kick the can down the road, which I think they'll probably kick the can maybe another month or two beyond that. Um, but what's good for real estate investors is that it's steady, right? They just like how they say, oh, we're gonna raise rates. All right. Well, it took them like 3 to 6 years to finally do it, right? And it's very slow and gradual over the time, and I think that's good for long-term prudent investors. Uh, Again, Joint Center for Housing Studies of Harvard University reports on inventories for homes for sale fell to a record low in early 2021. I said the Harvard guys come up with really good surveys. I just happened to pick a really obvious, Captain Obvious one. Yes, supply is at an all-time low, or at an all-time low, but it's really a low, which is why residential prices are hot, and everywhere across the country is hot. If your market is not hot, your market has a huge problem going on, more than likely. But I don't, what makes up prices is not only supply but demand. I don't know where demand is. Right, we know supply is low, but it's a question mark on demand. So what I mean by that is, is demand higher or lower than what it was? Now, people with money right now, your white collared folks, have a lot of pent up savings. Savings are going good for a lot of people because they can't spend it. I guess they're starting to spend it by going on vacations and that type of stuff. But a lot of the data says a lot of families on the higher end, middle class and above, have a lot of money, and which makes sense why they're buying houses due to the also the low interest rates. But I don't know. It's hard to measure demand. Supply is easy to measure because that's just days on market and how many houses are on the market. So this is a graph of existing supply of homes. Again, the supply, which we showed on the previous graph, is going down. But this is a graph of overlaid on top of it is year-over-year changes in prices, which definitely shot up starting last year. I guess right now they're kind of showing it over 12% per year, which is really crazy. Normal historical price increases, just goes up with the pace of inflation. And typically, they teach you in grade school where you're supposed to nod your head and just accept everything that's in the book is supposed to be 3%. But a lot of us that are listening right now know that's a bunch of nonsense. And it's probably a lot higher than that because a lot of the money that's in the stock market or pumped into the system is finding their way into the stock market, which is why prices are, I think, artificially inflated and why I don't invest in stocks. But as Facebook user says here, how inflation will impact us. Well, it's just going to devalue the amount of money that you have, and people who have a lot of debt, especially good debt, are going to be the beneficiaries of this. And they think this is why, like, a big motivation of what I do is because so many people have this completely wrong, right? They want to pay off their debt in their mortgage and have it all paid off, which I think is silly, right? Like if a lot of people have maybe $1 million of equity in their house by the time they reach the golden years, if they took that money and put it into something like AHP, making 8 to 10% a year, they'd be able to pay for 2 or 3 grandchildren's college like that, $100,000 passive income. But they choose to just keep it locked up in their house. Crazy to me. Uh, yeah, apartmentlist.com slash research slash category had this cool infographic that I have up on the screen now where essentially rents are rising quickly, everybody. Signal Captain Obvious, once again. That's the second point for Captain O. But like the way that I invest is primarily on like the big drivers, which is economic growth and population growth. And here is the population growth of from a state level. Of course, you always want to dive in on the MSA and then dive in another layer of the submarket. But from a high level state level, the big movers in terms of population are a lot of it is Texas at plus 16%, Utah plus 18%, Colorado plus 15%, Nevada plus 15%, Idaho, Washington, Oregon, all double digits. North Dakota, I mean, just throw that out. Nobody wants to live in North Dakota, and there's only like 10 people living there anyway. So that went up 16%. So there's like 12 people there now. That's kind of a joke. But, like a lot of these places like Florida, Georgia, South Carolina, multiple double digit population growth, where a lot of these have kind of been like low single digits, especially up in the Northeast. I don't know what's going on there. Um, the places that have remained the same or no growth is Mississippi at 0%, Illinois at 0%. I think everybody kind of knows about the troubles that Illinois has. Why? I was sorry. I just had a kid a couple months ago. I thought that was Wyoming, but I knew Wyoming wasn't there. That is West Virginia. West Virginia actually went down 3% down there. Hawaii has gone up by 7%. But yeah, this is just one way of kind of looking at your investments, investing on the trends where the population is going up, because that's what drives housing values and demand for rents. Um, if you guys like this, check out our accredited investor group, the Family Office Ohana Mastermind. Currently about 75 plus members in this group. Accredited only, pure passive investors only. If you're broke, don't join us. If you're interested in learning more about syndication deals, who to invest with, more importantly, who to stay away from, taxes, legal, and getting to know other people on a personal level, because a lot of us are kind of on this move from $1 million to $10 million net worth. So, getting the simple passive cash flow is easy, that whole journey, but it's all about, who you take the journey with and getting the best practices for more of the soft skills and the soft tactics on how do you build your family system and surround yourself with the right people. If you guys are non-accredited investors, what I would recommend is checking out the incubator, simplepassivecashflow.com/incubator. Pick up your first remote rental that way. But now if we're kind of to the end, if you guys have any questions, please pop it into the show notes. But I'm going to go into my personal side of the story, where I kind of just talk a little bit what I've been doing personally. Themed through Tony Robbins' six human needs. The first one is growth. This has been my life last month. I just change a lot of diapers and I don't get much sleep. Now I totally understand why only a third of the investors are under the age of, say, 30. Right? These are the guys who make $150,000 straight from college in their engineering jobs, or they're the max out your 401k guys. But most of the people are older than the age of 36, 40 years old, $1.5 million in net worth, and they have kids that are maybe 5 to 6 years or greater. People who have kids from 0 to 6, that is what I knew before as the Bermuda Triangle for anything in terms of even passive investing, let alone active investing. Now I know why. It's it sucks, kind of sucks. I mean, yeah, it's rewarding too at the same time, but yeah, it definitely is a time suck and energy suck, and it's definitely hard to like spend the time to read anything. Um, so yeah, if you guys that are younger than the age of kids, get your passive income now. Get that stuff set up. I was kind of lucky by getting this all set up, because I don't know how I could do it now. Um, and enjoy your time out right now. Second thing is, how does a contribution back to society and the community? Well, like there's a lot of people out there, and you guys follow the 40-40-40 plan, which is work 40 hours per week, do that 40 years, retire on 40% of what you struggle to live all of your life with, and that's the JOB. Just over broke. We're juggling our bills, or jail operating business. Uh, in my opinion, your life doesn't really start until you stop trading your time for dollars. So quit screwing around, putting your money to your passive investments so you can get out of that 9 to 5 day job. Sure, you might like it, but probably would want to do it a lot less. So jump on the simple passive cash flow bandwagon and let's have some fun. A little bit of significance here. I'm actually uh, wrote a book, folks, and this isn't going to come out until a couple of months later, I think, because the one thing that is slowing me down here is like I have to read it. Right now, I have it right here. I am reading it and I'm going it through it very slowly because I don't have very much time these days and making the audiobook because all you guys are too busy to read anything I mean, who reads things these days? I mean, who actually has time unless you're on vacation or something like that, which rarely when does that happen. But if you guys want to get a copy of my book electronically and you want to give me help me out with a review, I'll buy you guys a book when it does come out, but I'd appreciate that. Shoot me an email at lane@simplepassivecashflow.com. You guys can read it with me before everybody else gets a chance. Some things that everybody needs a little uncertainty in their life. If not, right now my life is kind of certain, and we do the same thing every day because I have an 8-week-old and I'm not allowed to leave my house. If not, I'll catch COVID or some other ailment and kill my daughter, and I don't want that to happen. So I am very aware that uncertainty is the spice of life, and without it, you don't need too much of it, but it helps counteract certainty in your life. So one of the ways I've gotten a little uncertainty is we had a fire on one of our developments. So you can't see it too much, but on the bottom left here, supposedly the story that we're going with too is that there was a lightning strike and it started a fire and it kind of burnt down that whole building. Good thing we have insurance and $2,500 deductible. We'll get it wrapped up. We're actually ahead of schedule, so it won't be too big of a deal. But that's why you have insurance. But that kind of like got me a little excited on a Sunday afternoon, a little bit. But overall certainty, right? Like things are being built, the value is there. If you see on the upper left hand corner, that's a big REIT we're competing against, and we're going to kick their butt in terms of schedule. They actually started, I think, like half a year earlier than us, and we're already kind of beating them right now in terms of construction. But our product is a lot nicer too. But anyway, deals are cash flowing for the most part, and heads in beds. Occupancy is very stable. Rents are going up. Life is pretty good, especially that's why you live the simple passive cash flow life. Unfortunately, I can't see all you guys, and I think a lot of you guys are, especially in the family office group, are going around the country, meeting each other, having fun. And I feel definitely a little bit of FOMO. I feel like I'm missing out a lot, but I am planning the 2022 retreat. So this is going to take place January 14th to 17th in Oahu. And one thing I did was I hired an event planner because I'm not going to be coordinating all the little excursions by myself anymore. I didn't go crazy doing it. I mean, I'm a pretty good wizard at the old Google Documents and like coordinating that type of stuff. But this year, if you guys haven't been on the pre-survey, please go to simplepassivecashflow.com/2022 retreat and please fill that out because that's going to help me plan it even better, and that's going to get you guys on the you're going to get access to buy your tickets a lot sooner than everybody else, and probably at a cheaper price. That's for sure. What I learned by doing that survey is a lot of you guys are pretty jazzed about coming to Hawaii, maybe because you guys are stuck at home for an entire year, 2020, and it's going to be a pretty big event. I'm thinking 80 to 100 people at the very least, and I think we're going to cap it at that number. It's not going to be like a stupid conference with a bunch of speakers. It's just the I'm going to be teaching about, taking money out of your 401k, investing in deals, other soft topics that I know a lot of you guys like in the family office group. But it's going to be more predominantly put on building relationships with other pure passive accredited investors, because in my opinion, that's really the only way to kind of find your way in this world. Um, Family office clients are going to get first access to it, but then it's at some point we're going to be going out to the bigger simple passive cash flow community. Obviously, accredited investors are going to get first access first. Um, but I hired an event planner, so that's kind of fun, and it got me really excited because apparently they know what they're doing and a lot more. They know this a lot more than I do. Go figure. And they do that for a living. Some fun things I found for Doodads. I found Amazon delivers stuff from Whole Foods, and I don't have to pay a delivery fee. If you guys haven't found this is the big uh, time savings. I think the bad thing is like you can't get the sale items, but I don't like the sale stuff. To me, that I don't like the tricks and games about sale items, so I don't really care. But there's a huge convenience. I don't have to pay a convenience fee or delivery fee. So if you haven't checked that out, check that out. And that's it. Unless anybody has any questions, we will see you guys next time. Thanks, Keith. And we'll see you guys next time. Bye.